G'day ladies and gentlemen, my name's Craig Cobb from the Grow Me Co. If you want to be better at trading, be sure to click subscribe. Now we're getting to the back end of this entire series, and if you haven't watched the entire series, make sure you get on there and you have a look now, because each of these items in this checklist, amongst other things, will be a chapter that you need to watch to understand. But if you've been through it, here's the culmination of everything that I've taught in this particular series, brought to you by BloFin. At this stage, you should have already opened up your BloFin account. If not, in the description below, you'll find the link to open your account. You will also find how to go long and how to go short videos in this series. So the checklist, we're going to follow these steps to give you a much higher probability of successful outcomes moving into 2026 and beyond. Number one, we're going to be finding timeframes with clear trends. The first thing I always do, as I've been saying to you, is look for real things, which is price. Price measured by time and the culmination of a number of different candles to create a trend. We're looking for higher highs and higher lows in an uptrend and lower highs and lower lows in a downtrend. Number two, moving averages in the correct order. Now we know through going through this, I use the 10 period and 20 period exponential moving averages. If you're in an uptrend, the 10 period moving average needs to be above the 20 in a nice fanning fashion. That's all you need to have with a trend. If you're in a downtrend, the 10 needs to be below the 20. That's all we need to know when it comes to making sure that our moving averages are in the correct order. Number three, the MACD, the only indicator that we use. The only indicator that I use and have done for a long time is the MACD. And we want to make sure that if we're in an uptrend, as price is making higher highs, the MACD is in agreement. It's also making higher highs. That's what we want. If we're in a downtrend, we want to see that if price is making lower lows, the MACD is also making lower lows. Keep it very simple. Work through these individually. Don't overcomplicate a simple process. Once you've done this, you'll have found a trend in your favor. You'll have the moving averages in the correct order and the MACD converging. Well, now it's time to have a look at the time frames, both higher, or basically the time frame you're looking at and higher, to see if there is any support or resistance in the way. Okay, we don't want to be getting long if there's resistance right there ahead of us, because it's a reason for the market to turn. We don't want to be getting short if there's support right there, just ahead of where we're entering, because we don't want a reason for the market to bounce. Being aware of what is going on, if there's any support or resistance around, can help us to make better decisions, mainly in leaving a trade. Of course, if there is a level of resistance and we're shorting it and we're underneath it, that can also be a very, very good thing. So make sure you draw in any support and resistance levels as noted of what that is in that chapter of this program. Next up, you can draw in your Fibonacci levels to see if you get a bit of a cluster of things like the trend, the moving average, support and resistance, and different Fibonacci levels in the same area. This just heightens your ability to be able to look at, okay, this is a highly probable scenario for the market to play out from this point. It doesn't mean it absolutely will, but remember, what we're working for is higher probabilities in our trading outcomes. So draw in your Fibonacci levels and see if there's anything of a confluence around these moving averages and trends. Next, calculate your trade. You'll have an entry price, you'll have a stop loss, and now it's time to calculate the size of the trade so that you're knowing exactly how much you're risking on the trade should it go against you. Of course, there are videos here to show you how to put an entry, how to put a stop loss, and how to put a target, as well as what sort of options you've got as far as targeting. So make sure you watch those videos, make sure you manage your risk to 1%, and then go ahead and raise your order with that entry, stop loss, and target. This is the way you increase your probability of successful trading outcomes, not just in 2026, but into the future. Using simple checklists with very straightforward objectives, allowing us to make decisions on not just one item, but several different items, is going to improve the way you read markets and your probability of success. If you want to find out more about how I do this and my full checklist, well, please do join up at thegrowmeco.com. Other than that, there's a free newsletter there as well as other trading tools for you to become a better trader. If you haven't already, jump into the description below, open up your BloFin trading account, as they've sponsored this whole event and they're a fantastic platform. I hope you've enjoyed this series and I hope this finds you well. Good luck in 2026. I'm around if you need any help. Ask in the comments. Bye for now.